Imagine checking your bank account and seeing $5,000 sitting there. You haven't spent it, you haven't transferred it, you haven't even touched it, but somewhere inside the financial system, that money may already be moving. And that's the strange part about modern money. Your money doesn't wait for you to spend it. The moment you deposit money in a bank, it becomes part of a much larger machine. Let's say you deposit $10,000. You might think the bank simply puts your $10,000 in a vault and waits for you to withdraw it. That's not how modern banking works. Your deposit becomes a liability for the bank. At the same time, the bank uses its balance sheet to make loans, buy assets, settle payments, and move money through the economy. So while your account balance looks perfectly still, the system around it is constantly moving. And here's where things get interesting. Imagine another person walks into that same bank and borrows $10,000 to buy a car. The bank doesn't necessarily take your exact $10,000 and hand it to them. Instead, the banking system can create a new deposit when it makes a loan. Now there are two claims inside the system. You still see your $10,000 in your account, while the borrower sees $10,000 in theirs. That money can then move to a car dealer. The dealer deposits it into another bank. That bank can use the new funds and balance sheet capacity to support more lending and transactions. Suddenly, one simple deposit has become part of a chain of economic activity. This is why money isn't just cash. It's also bank deposits, credit promises, and claims that can move between people and institutions almost instantly. And that creates an uncomfortable reality. The money you see isn't necessarily sitting somewhere waiting for you. It's part of a network. Banks move it, businesses move it, governments move it, investors move it, and central banks can influence the price of money itself through interest rates and liquidity. That's why a change you barely notice, like a quarter-point rate move, can eventually affect your mortgage, your credit card, your investments, business loans, and even hiring decisions. The system is connected, but there's a catch. When everything is working, this constant movement makes the economy incredibly efficient. When confidence disappears, the same connections can transmit problems incredibly fast. A bank doesn't need to lose every dollar it has to face a crisis. It may simply face too many withdrawals too quickly, because modern banking runs partly on confidence that money will be available when people ask for it. And that leaves us with a bigger question. If your money is constantly moving through a system you can't see, and that system depends partly on trust, credit, and promises, how much control do you really have over the money you think is yours? Maybe the most important thing about money isn't where it sits, it's what happens before you ever spend it.